The network, just as I was saying before the network interrupted. Now, as you can see, this V75. Now, this market now, as you can see here, is making a higher high here. Let us analyze it. It's making a higher high. Okay. It's making a higher high. Look at it. From here, from this place, and it's making this thing, sorry, a low here, which is the support. Now, this is the support after a break of structure. Now, as a good trader who know how to trade, now, this is a support zone. You can put it here. Now, as a good trader, if you are to buy, this is what I was saying. You don't buy at this zone. You don't buy here. You don't buy here because your stop loss is supposed to be below the range. That is why we have a customized feed we use to trade the market. Now, if I want to buy this market after a break of structure, I want to draw my feed and play at, I'll draw my feed, put it here. You see, I can enter trade from sniper 1 or sniper 2. That is where I will take my trade from. You see, from this low, I can take my trade from sniper 1 or sniper 2. So around this region between sniper 1 and sniper 2, that is where I will be waiting to take my trade. It's in a bullish market like this. And my stop loss will be below this 100 here. That is a good trade. You are risking a little. My stop loss, my take profit will be above this high here. So anything the market was doing as far as here was concerned is internal structure. Everything it was doing here was just internal structure it was playing. Internal structure. Look at it here. Look at how it took out liquidity here. This place. So everything that it was playing as far as this market was concerned, understanding market structure from here to here, it just called what? Internal structure. According to daily, it's internal structure. Now, after this market finish making higher high, it make another what? A good trade, how to trade the market successfully. Now, let me remove this one. It make another what? Another low. Look at it. It make another low. This is another low. Another what? Higher low. And what? A higher high. Look at it. This is daily. It make another what? Higher low and what? A higher high. Now, look. Inside this higher low and this higher high, there was an internal structure too. Look at it. Look at internal structure. The market move here, make a higher high, come back and break this structure here. Look at it. It break a structure here. This is what we call internal structure. It break internal structure here. Inside this range, it break internal structure. So if I'm to buy this market, I will be buying this market around from this zone. That is where I will be buying. So I will use my fib to measure from this where it broke this internal structure here to this place, because this place also here now is called what? A higher, it's called a higher low and what? Sorry, and what? A higher high. So if I have to buy this market, I will be, because of the smart play they do here, because of the smart play here in this zone, this is where I will buy it. So I will trigger my feed from here to this place. I will measure my feed. I want to play sniper 1, or sniper 2. That's what I want to play. They didn't come back to my sniper 1 or sniper 2. Highest I will play is OT3. This OT3. So this OT3, I can still play OT3 in this place. But to be in a safer risk, I play sniper 1. So my stop loss can be little. I enter the market from here. My stop loss will be here. And my TP will be here. You see, this is like 1:, as you can call it. See, I'm risking a little from here to here to take my TP here. This is a good trade. So you don't trade anyhow in the market. Don't just jump and enter inside trade because you want to buy or sell. You will lose more. So this market form a higher low here and a higher high here. You see, form it. Now, after this higher high, what happened? It now form another what? Another higher low in this place. So look at it. it now form another higher low here. You see, now form another low and what? Another high. Look at it. It is a topically a buy market. You see, it now form another what? Higher high. Now the market has formed another what? In this place, it has formed another, a higher low here. A higher low here. Then it has formed a higher high in this place. This is daily structure. You see, this daily structure. Now, there is internal structure here that was broken. There is internal structure here. So this internal structure is what I'm after. This internal structure. So I will want to buy this market at this somewhere here. So because they broke internal structure here, this internal structure that was broken in between this higher high and this higher low, internal structure was broken here. So I will wait for the market to come back to this zone for a buy, which are already coming back. So I will just draw my feed from here to this place. You see, you make market easier. Draw your feed. Now you draw it like this. Now you want to place number one, which is here. So if I'm to buy this market, I want to buy it here. Then I will buy it there. Then my stop loss will be below here. Then I will target my TP at this high, which is here. See, this is a good trade. That's how you trade the market. You are risking from here to here to make something from here to here. It's a good trade. So if you lose, no problem. But many of you, when you're trading the financial market, under a buy market, you want to lose what you are losing. You want to just gain a, you see, you want to gain a little. Just from here, you want to gain a little. You will just enter the market and jump here. It may go to your favor. You'll be saying that this market, but just collect a little and run out of the market. No. Market is always in a direction. It's moving. So you need to understand the direction of the market to trade it. So many of you will say that, why did I use this one as higher high, higher low, 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 higher high. You see, many of you can decide to trade, to analyze the market like that. No. You know why? Because here is from here to here is my range. Now, until this market take out this range, I don't consider anything as higher high yet. I want the market to take out this range. When they take out this range, now from this low to this high become another what? Another range again. So I want the market to trade back to this zone, to this zone. I'll be waiting to see where they play smart money play, or where there is supply or demand zone, or where there is what I call liquidity grab. So I want to wait for those areas where there was a smart play, internal structure be taken. So those areas is what I want to wait for. Then to buy, I use my feet. Look at here now. See, the break like this structure was broken here. Look at it here, was broken. Internal structure was broken here. You see, internal structure was broken in this place. Internal structure was broken. You see, they are broken in internal structure, but the market is still buying. It's buying up. So you follow the direction of the market when you understand structure. This structure, this V75 structure. So do you have any question before we move far, before we continue? Any
yes,
question?
Mr. Bright.
Yes.
You said, I'm sorry, the way you drew your line, I discovered that you are drawing it from week to week. Are you using week as the top, or you are using the body?
For what?
As in the line for the higher high and the higher low.
I'm using the
I discovered that you are using the week. That's what I'm asking. Okay. And then the other time you were explaining internal and external structure, market structure, you said we should always wait for the market to retrace back to the support. But in this case, it's like it's not coming back to the main support. It's just touching the internal, let me say the internal support, and then bounce back. Are we still good to go with that?
Yes. The reason why I'm doing this internal structure is because of liquidity listing. If you understand smart money concept, that is our next subject on smart money concept. I'm organizing a class on smart money concept. starting on the 1st of May is mentorship. I said everyone is to pay $30. Now, I'm to teach that class based on smart money concept. Smart money concept is when you see smart play in the market, smart play, what we call smart play, is in between a range. Like from year to year now is my range. From year to year is my range. From year to year is my range. Don't you see what the market did here with this institutional candle? So this is smart play. So I'm looking for smart play in the market. I'm looking for supply and demand. I'm looking for liquidity graph. So to trade the market. So that is the three strategy I trade. Aside this one, no other one. I won't trade any other one.
Okay. Then another question, please. Can we try this on a lower time frame?
Yes, we can try it on a lower time frame. Yes.
Like a 5 minutes?
5 minutes.
Yes.
5 minutes is a smaller structure time frame. You can try it to work. So this is 5 minutes. Let us start from, okay, let's start from somewhere here now. Or let's start from 5 minutes. Let's go backwards. This market has been selling. Or we try in a downtrend. Let me go back. I want to show something when the market was buying. So that you see what I'm saying. Okay, maybe I will start from here. For example, let's say this is my range. This is my range low. Are you getting me?
Yes, I'm with you.
Now, this is my range high. Now, this is my range high here. You see, this is my range low. This is my range high. Now, this market make a range high and a range low. Now, from this low here, it form another what? Low here. Good. Now it form another low, and it also form another what? Another high. It form another high here. Look at it. Now from this high, it form another what? Low. Yeah. Look at it. Are you seeing it? It form another low.
Yes, I'm seeing it.
And it form another what? High. This is structure. This is a buy. The market is not in buy now. If you are to buy, I told you buy at the support zone. Here is a support zone.
Yeah.
As you can see, there's a demand zone here. There's a demand zone here. So you draw your fib. I want to buy at a discount price. I don't want to buy at the market. I can draw my fib from here to, because of that demand zone, I can draw my fib from here to here. Now I want to play sniper one. This is sniper one, sniper two. So I want to buy either from here. I want to buy from here. Then I want to put my stop loss below here. Below the range. Like this is why I put my stop loss I'm buying. Now I'm targeting here as so I'm sniper one, sniper two. Majorly I play sniper two most or sniper one. That is one I trade most, sniper two. So I want to trade from this sniper here, from this place to this place. So my market get activated, my stop loss is not touch my stop loss. So when I get back to this, that's my first tip. Are you understanding me?
Yes, I'm with you.
So you can't say that you want to trade this market and you want to buy. You want to buy
those good. I make it smooth them.
Yes, I've met everybody. Now, I can't say that I want to buy this market here. I want to buy here. I want to buy here. I want to buy. What I'm risking will be much. I will always wait for price to come back to the support zone, to a discount price for me to buy. I sell at a premium price and I buy at a discount price. This is my discount price. So I want to buy when the price is low. I buy here, buy somewhere here. So if I'm to buy this market, I should be waiting for somewhere here. If I'm to buy again, I wait for somewhere here. These are area of buy where I'm looking to buy. And that place, I want to see supply and demand zone. Look at it. From here now, the market what? From this zone now, the market form another what? Look at it. Oh. It form another what? Higher high. It broke this high. This high was broken. From here again, it form this is our low. This is my range low. Look at it. Market has formed another low here again. From here to here, it form another low, which is my range low, which is my higher low and higher high. So from this higher low and this higher high, I want to draw my feet from here to this place. Because of something I saw here, there was a break of internal structure here. So I just draw my feet from here to here. So I want to place sniper 1 from here to here. So I will place sniper 1. This is my sniper 1. This is my sniper 2. So sniper 1, sniper 2, what I want to play. And my stop loss will just be below here. Look at it. They came exactly to sniper 1, sniper 2. From there, what happened? The market take off. Are you understand? Are you seeing structure? This structure. So the market has already formed a higher high. Now from this place now, this higher high now become my next. This is my higher high. So from this point, I will come back here, which is my higher low. I've gotten a higher low here. Look at it. I've gotten a higher low here. So I'll be patiently waiting for this market to come back to this zone. Now from this higher low here, they play from this place now, they played another what? Higher high here. Look at it. They play on that higher high here. This is a higher high. Now, this market play a higher high here. Look at it. From here to here, play a higher high. Boom. Now, this is the low. Now, this high, I wanted to take out this high. Look at it. This is the last high. Although the market returned back here. So, this high was also broken here. Look at it. This high was broken. So, as far as this high was broken, I'm willing to, around this one, this will become a higher low. Automatically, it's a break of structure to the downside. We want to experience a down movement. You see, a down movement started instantly. Immediately, this higher low was broken. A structure had changed from a downtrend to from uptrend to a downtrend. You see, because this one was my last higher low. This was my last higher high. Look at it. You see, immediately they broke this higher and broke my higher low. Bam, bam. You see, this is not an internal movement. Understand this is understanding structure. I can't use this place. No, I will use here. Now, they broke it and return back to it. Grab this supply and demand zone here. Look at the demand zone here. They grab it. This supply zone here. They grab it from here. They go down. So if I'm to sell this market, I will draw my fib from here, from this high to this low. From this high to this low. Now, I will wait for the market to come back to my sniper 1 and sniper 2. Finish. Then I will put my stop loss above here. Bam. This is my stop loss. This is what I'm risking. From here to here, what I'm risking. Then I'm targeting this up because the structure has been broken. So I expect them to take out this low. So I'll be targeting somewhere here at my TP. Look at it. The market came straight to it. He even passed that place and he's still selling. Okay, he didn't pass that place. From there, he moved again. From this low, the market what? Move again. That's what I was telling you. Although structure has been broken, but look at this low here. They came back to this low and move again. That is understanding structure. When you understand structure in the market, you don't trade every market. You wait for the market to come to you. Don't chase the market. Many of you, we chase the market. That is why when we are losing, we are crying. We are losing, we are crying. You are losing, you are crying. Why will you be crying? You are the one that use your hand enter the market and you are the one that lose your money. So nobody helped you to lose your money because your risk management, you didn't know how to risk. So you risk, what you are risking is bigger than what you want to gain. So this 5 minutes, it works. Even on 1 minute, it works when you understand structure. What you need to understand in this market is 1 is structure, 2 is smart money's concept, 3 is supply and demand. Then the one I call my own liquidity grab, the one I trade, that one is secret. So I have not revealed that one to anyone yet. So this is how the market works. So any question, please ask your question. We are not talking about bearish market now. We're talking about only the bullish market, what we are still dealing on here. I'm not talking about break of structure yet. Although I mentioned it in my trading for a case of the people watching the video. So I mentioned it. So ask your question, please, before we go. Yes. Question?
Yeah, Mr. Blight.
Yes.
Please, in your videos at YouTube, like you were saying something about liquidity running, liquidity grab, liquidity taking, liquidity inducement.
Yes.
Yeah. Like, can you go over and then show us some examples of it?
No, I don't want to confuse the people of this market. That is our next lecture on mentorship by May. So I told you now. So I asked you guys to register. So I asked you guys to register. I don't want to complicate this, because if I want to go into that, I have to start again, talk about liquidity grab and liquidity run. We have what we call liquidity grab, liquidity run. When a market do liquidity run, liquidity grab, and there are things. Is that
liquidity inducement, liquidity taking? You said all this things about your videos.
Yeah, and liquidity pool too. Liquidity pool.
Yes.
Yeah, liquidity pool. That we call liquidity pool. So all these things are to be taught to you on smart money concept. It's a smart money concept that come with all these pattern. So when you are taught smart money concept, all these things, you know it in the market. When the banks, the institution left their orders and they are coming to grab it, you trade 50% of it and hit the market hardly. So that is how it is.
Mr. Bright.
Yes.
Please, on the higher time frame, we discovered that this market is a bullish market.
Good.
But on the lower time frame, is it a must for us to also wait for the market to give us that bullish structure before we trade? Or if we are seeing a bearish market on the lower time frame, can we also trade it that way?
You trade structure according to time frame. For example, if you go to daily is buying, good and fine. Are you getting me? You can come to a lower time frame to buy too. Just as I've identified that market at my zone, at daily time frame, which is V75, now I've already identified it as a buy market. So if I'm to buy, this is where I'm looking to buy here. This zone, this daily. So as far as broken structure on a smaller time frame, that is smaller time frame structure will be broken. So I will wait for structure to be formed again on lower time frame before I start trading it again.
Okay.
Do you get me?
Yes.
If I enter 1 hour time frame now, I can analyze structure. There is a market I was analyzing yesterday on V75-1S, like this market and V75-1S. Look at this market. Are you seeing what we are doing here? This market is coming back to this place here to sell. Okay, they have already used it. Don't you see what they did here? The market formed a higher high, a higher low, a higher high, a higher low. Now, see the mistake they did. Now, they break this higher low here. Look at it. The market formed a lower high our time and a lower low. Look at it, form a lower low. Now, it now form a lower high here again. This 30 minutes, I want to show you something, and a lower low. Now, this market is selling on a downtrend. It's selling on a daily time frame. Now, this lower high was broken here by this candle. Now, internal structure. Good. That is liquidity grab. Good. Yeah. Now, the market now came down and break this low again, which means structure has been reestablished again. Downtrend has been reestablished again. Now, what will happen? If you are to now sell this market, I just draw my feed from this place to this place. I place sniper 1 or sniper 2. Look at it. I just draw from here like this. Then I want to place sniper 1 and sniper 2. And my stop loss will be above here. Let's check what the market did. Look at it. You see what the market is doing. Are you seeing it? So if because of this candle, because this is an institutional candle, under institutional candle law, what they normally do is that they can take from the beginning here, which is from here. They can use the beginning of the candle. They can use 50%, and they can use sniper 1. So that is just what I will do. If they take me out, they take me out. If I'm losing from year to year. Just a little, like $2 or $1. It's okay. And I'm losing like $1 or $2 to make like $50. You have seen me trading. I raise on $10 to $200. I raise $1 to $50. You see, I'm risking cents to make something bigger. That is trading. Trading, you don't risk big to make a little. Many of you will say, let me just enter this market, we buy. You are forcing the market to buy. You are forcing the market to sell. This is now. Are you seeing now? They have broken this structure again now. As far as they have broken this high now, a buy structure has started. This market have started buying. As far as this structure has been broken now, this lower high now, the current lower high have been broken now. The structure have what? Started. Now, what I have to do now as a good trader, I mark out my chart. I just have to mark it out. Let me delete this one. I just have to mark it out. Now I will start from here. Structure will be broken. I will start from here. Higher market make a high and it make what? A low. It make a high and a low. This is my range from here to here. Now from here to here again now is my range. From this low to this high again is where I'm looking at now. Now if I'm to buy this market now, it's coming down, where should I buy? Around this zone here. So I will just take my fib. I will take my fib from here to here. Now I will first put my fib. This is my sniper one. This sniper one. So, but because of something here, sniper one is good. Why I'm taking sniper one? Because in this place from here to here, there was internal break of structure here with this candle, and this candle was also broken by this move. So a structure was broken and the market came back, grabbed here. So as the market is coming back here, around here, I want to buy here. I'll put my stop loss here. If I buy here, my TP will be above this high. That is a good trade. Now, if I don't want to buy, this is 30 minutes. I want to do more analysis on the market. I can just check. Let me check. Okay, good and fine. Yes. 1 hour I've said. 1 hour I've said it all. 1 hour. 1 hour I've said. Yes.
Please, there is other block. See where they are started buying.
Okay.
Go up.
Yeah.
No.
Yeah.
No. Yes, exactly.
Good.
Yes.
There's other block here. Yes. A market can play 50% retracement. It's a normal thing they normally do. I know they can from here now and come back. That is 50% retracement. Yes, look at it, 50% retracement. But I'm not buying at 50%. The reason I will not buy at 50% because what I'm risking will be big. I will be risking from here to this zone here. Look at what I'm risking and look at what I'm gaining from here to here. It's a bad trade. It's not a good trade.
Yes.
So what I'm risking is bigger. So I will not buy. Even though I see our other block here, I will not buy here. Unless I see a demand zone that will make me to trigger a trade here and I'll put my stop loss below here. But as far as trading is concerned, here is not a discount price. Here is where the discount price is. So I'm buying low to take my profit high. That's it.
Okay.
So any other question?
Yes, on this VIX 75, because I'm in a trade in VIX 75 from lower time frame. So I don't know if it's advisable to just pull out of the trade or something, because with the way you've said now, that's on VIX 75, not 75 1S.
Okay, VIX 75.
So the way you said because on VIX 75, please, what can you say about this?
VIX 75 is going to buy. Why? Because he's going to buy here. The reason is that there is a demand zone that was taken here. So this demand zone, so they have already breaking this demand zone. So you see, they are even on it. So if I'm to buy, you see, this is a demand zone. This is a demand zone. So from this place, I expect the market to buy. But because of reasons, I want to buy here. There's a smart play here. So I will wait for the market to come to my discount zone, which is around this place, for me to buy to the upside. That is what I will do. That is what I will do. I will wait.
Oh, okay. Maybe I should just close the trade and wait, because I'm already in the trade now.
Yes.
Maybe I should just close the trade and okay.
Yes. Yeah, and if you are to sell on a lower time frame, now I can use 1 hour to sell, or you can use like 15 minutes if the trade is too big. Now, if you want to sell, where do you want to sell? Do you see that what I was saying? Okay, here is my lower high. This is my lower high. Now, this is my lower low. Sorry, this is my lower low. Lower low. Sorry. Now you see that they are broken this lower high here. A structure has been broken. Are you seeing it?
Okay. Yes,
now,
yes. I
the
can
structure
see.
has been broken. Now, if I'm to sell this market, if they can come back and look at this low. Now, if they break this low, I will wait for them to come back and pull back to this place. Then I will sell from here to the downside. That is how we trade it. Because you can also buy here.
For the sell, okay.
Yes, you can buy here too, because structure has been broken. Now, at this structure has been broken, there is a break of structure here. there is a grab of liquidity here. In this place, grab of liquidity here.
Okay.
So I can use my fee
Okay.
from year to year to buy. So if I'm to buy, so I wait for market to come to my sniper 1 so that I can risk a little here, or sniper 2, which is this zone. I can wait for the market to come back here as they are coming back. So I can, if I want to buy, I can buy here. I can buy here.
Okay. Okay.
But if they took me out of the
Okay.
market, and my stop loss will be here. This is where I'm buying. This is where I'm putting my stop loss. And if I'm taking my profit for, I'm taking my take profit here. So I'm making like ×3 of what I'm losing. So I like ×4, 1:4. What I'm doing here, 1:4. So I will take my fib again based on when they are coming up. I will take my fib and measure from this high to the low here. So I will not be buying, because if once they started buying up again, I will not want to sell here, because as far as lower, as far as they are making a break of structure and they has formed a lower, they has given us a range low and a range high. So I expect them to move from here and take out this high again and come back and do something like this again. So that is what I want them to do from a lower time frame perspective. That is structure.
Okay.
So there are many things you need to, if you understand structure, market is very, very
Okay.
easy.
Thank you. Thank you.
Yeah. So just close your trades for now first. So any other question, please? You are about stopping
Okay.
here.
Okay. I'll do that. Thank you.
Yes. Any other question? So I think we are done for today. So we'll continue the class. I majorly say that the class is to resume by May, 1st of May. So 1st of May is when we are going to deal on structure very, very well. We deal on structure very, very well, as we can deal on structure for like 1 week or 2 weeks on structure. Then after structure, we talk about liquidity. Then from liquidity, talk about liquidity grab, liquidity pool, and liquidity run. From there, you begin to look for the smart play in the market. That's it. You are good to go. Any market that has candle, you can trade it. Whether forex or whether crypto, as far as you has candle. Yes.
I would like you to send the group link.
Okay, the group link.
Hello? Yeah.
Okay, the group link. Okay, maybe I should put the group link on this Zoom meeting now. Then from there you can chat. So any other question?
Please drop the group link also on your group, on your platform. Drop it there also.
Okay, the group with the smart money.
No, the group link. What is it called? The Telegram group link.
The Telegram group link. Okay.
Yeah.
That is what I'm dropping. That's what I'm dropping now.
Yeah, I'm saying you can drop it also. Drop it also on the platform, on the Telegram platform, so that some of us can copy it from there. And
which group are you, Seth?
Your group, of course.
Okay. Okay. I will drop the Telegram link. I understand what you are saying. I will do that. I will. So the person asking for the group link, which group are you? Are you in my group? Or
yes.
Today's your first time?
Yes, of course,
yes. Okay. So we'll be stopping here. Thank you all for coming for the meeting. Let me drop the link on the chat. I will also drop it on the group also. I will drop it there. So thank you all for coming to the meeting. Also, please, we are organizing a mentorship class. A mentorship class on the 1st of May. This May that is coming. We are starting on the 1st of May. So if you want to register, it's just $30. We want to talk about smart money concept. So register, you become a student, and we teach you everything you need to know about the financial market. You know, you be a guru in this financial market. Forex market, today forex market is easy. Seriously, it's easy. It's not hard. It's just because of too many teachers that are making it complicated. So this market we buy this market here. You buy. I'm seeing a buy, possibility of big buy. By right, we're supposed to buy it here. but my risk will be too much. So I will not try that. I will wait for them to come here because of my risk. So I would like to buy this place, not this place, because of my risk. So I want to risk it. And, that's it. So guys, thank you very much. God bless you. So the class will continue when you guys register for the smart money concept on the 1st of May. So we'll continue the structure there. So if you're interested, just register and join the class. Although this one will continue. So thank you, everyone. Take care.